A personal loan can help you pay for almost any expense, but that doesn't mean a personal loan is the right tool for everything. If you're trying to meet a financial goal like renovating your home or consolidating your debt, you are going to have really different considerations than if you're facing financial difficulties. I've been on the lending team at NerdWallet for the past 5 years, and my colleagues and I spend pretty much all our time digging into the ins and outs of this stuff so that we can help you make smarter money moves. So today, let's talk about the pros and cons of personal loans. A personal loan can help you pay for just about any expense, but that doesn't mean a personal loan is always the best way to pay. If you're trying to meet a financial goal like consolidating debt or renovating your home, you are going to have really different considerations and needs than if you're facing financial difficulty. I've already mentioned that you can use a personal loan for practically anything, but again, it's generally wisest to use it if it will help you meet another financial goal, not just to grab some quick cash. So for example, you could use a personal loan to make debt payments more manageable with a debt consolidation loan, or to renovate your home and do some improvements that might add to its value. A personal loan can also help you spread out a large expense. So with a personal loan, terms are going to vary, but you may have as long as 7 years to repay the loan. Spreading out the payments over that amount of time means you'll have a lower monthly payment. Also, because personal loans have fixed interest rates, that payment is predictable. It's going to be the same every month. Last, fast funding is a huge plus of personal loans. Some lenders offer same-day or next-day approval, and you'll generally have your funds within a week. Of course, there are downsides too. One is that you're going to need to be able to qualify. Now, there are lenders that will give you a personal loan with bad credit, but in general, the lowest interest rates and the best terms are going to go to borrowers who have solid credit scores, who can demonstrate consistent employment, and who have lower amounts of debt. Another potential con? Personal loans are paid out in a lump sum, so you get all of the money right when the loan's funded. Now, most of the time, that's totally fine. But if you've got an ongoing project, or if you're not sure exactly how much money you're going to need for something, you could end up having to borrow more later, or realizing that you borrowed more than you needed in the first place. Lenders will generally charge you an origination fee just to cover their costs for giving you the loan. Origination fees usually range between 1% and 10% of the amount that you're borrowing. So say you were getting a $10,000 loan, the origination fee would probably be somewhere between $100 and $1,000. Lenders will also decide how you're going to pay that fee. In some cases, the money will come out of what you get when the loan is funded, and in other cases, they'll tack it onto the amount that you owe. There are also a bunch of factors where it depends. For example, interest rates. So let's say that you're comparing paying for something with a personal loan versus paying for it with a credit card. In a lot of cases, that personal loan APR is going to be lower. On the other hand, though, if you're comparing a personal loan to another kind of financing, say borrowing against home equity, in many cases, the personal loan is going to be the loser in that battle. Let's talk about payments. On one hand, personal loans have fixed interest rates, so that monthly payment is nice and predictable. But on the other hand, if you've got an especially high interest rate, that monthly payment might be hard to manage. And speaking of monthly payments, if you make them on time, a personal loan could potentially help you build your credit. But if you miss a payment or if you're late with payments, that's going to potentially have negative credit impact. Clearly, there's a lot that you can weigh if you're deciding to get a personal loan. Let's boil it down to a few key considerations. One, if your credit score is especially low, a personal loan just might not make sense for you. Regardless of how you intend to use the money, the interest rate that you're going to be offered might not make it worth it. Similarly, if you think you're going to struggle to make the payments, a personal loan could actually cause more problems than it solves. But if you've got good to excellent credit and you'd use the loan to put yourself on stronger financial footing, say consolidating debt or improving your home, a personal loan could be a smart choice. I'm Kate Wood, and I'm a writer on the lending team at NerdWallet. If a personal loan is the right call for you, head to nerdwallet.com to check out our list of the top personal loan lenders. But while you're here, like and subscribe for more.